Chancellor Jeremy Hunt recently presented his Spring Budget 2023. He had styled his Autumn 2022 statement as one for stability. Spring Budget 2023 was very much one for growth, and as a result of that, there were very few measures which it will impact on the private client. My name is Morag Watson, and I'm a private client partner with Azets based in Edinburgh. We not only look after the compliance affairs of our clients, but also ensure that we can help them plan for the future that they would like for themselves and for their families. Over the next few moments, I want to look at what we knew already from the Autumn Statement and the Scottish Budget in December 2022, the measures that were introduced in the Spring Budget in March 2023, and I'll finish with a few words on what wasn't mentioned either in the Chancellor's speech or in the accompanying documents released by HM Treasury. So what did we know already? Well, the first thing was in relation to income tax rates. There was to be no change to headline rates of tax, with basic rate tax remaining at 20%, higher rate tax at 40%, and the additional rate of tax at 45%. These rates currently apply to taxpayers in England, Wales and Northern Ireland, with Scottish taxpayers having slightly different rates of tax and rate bands. The announcement that had been made in both the Autumn Statement and the Scottish Budget last year was that as of the 6th of April 2023, the threshold over which an individual would pay the additional rate of tax is set to reduce from its current level of £150,000 to £125,140. This means that anyone with income over that amount will pay tax at the additional rate of 45% in the rest of the UK, but 47% for Scottish taxpayers. In relation to dividends, we knew that the dividend nil allowance, which currently sits at £2,000, will reduce to only £1,000 from April 2023, with a proposed further cut to only £500 from April 2024. This potentially brings more people within the self-assessment net, particularly those who are reliant on a portfolio of dividends to fund their retirement. In relation to inheritance tax, we knew that the nil rate band, which currently sits at £325,000, has been frozen at that level until April 2028, with the residence nil rate band of £175,000 equally frozen at that level until April 2028. In relation to capital gains tax, we knew that there is a proposed cut to the annual exemption from its current level of £12,300 down to £6,000 from April 2023, with a further cut to £3,000 anticipated from April 2024. These rates apply to individuals, with trustees only benefiting from half of those proposed new levels. So what was announced in the recent budget? Well, the biggest headline from this speech was in relation to pensions reform. Currently, an individual has an annual pension allowance of £40,000. This is set to increase to £60,000 from the 6th of April 2023. In addition, individuals with substantial pension pots currently face a draconian lifetime allowance charge. And the Chancellor announced that after April 2023, no one will face such a charge. At a future point in time, the lifetime allowance will be completely removed from pensions tax legislation. Currently, an individual with income over £240,000 has their annual pension allowance tapered by £1 for every £2 of income over that level. That income threshold will now rise to £260,000. In addition, the money purchase allowance, which is the amount an individual can contribute to their pension once they have accessed it, and the taper amount will both increase from £4,000 to £10,000. This all seemed very positive. Within the small print, there is a slight sting in the tail. Currently, an individual can access tax-free cash of 25% of their pension pot. Going forward, their pension pot will be able to grow to any level without them facing a lifetime allowance charge. However, their ability to access that 25% tax-free cash will be limited to 25% of the current lifetime allowance. In other words, they will be able to withdraw a maximum of around £268,000 as tax-free cash going forward. There were a couple of other small announcements hidden in the accompanying documents from HM Treasury. One of these was in relation to administration. Currently, a number of taxpayers use third parties to complete tax repayment claims for them. And that repayment can be sent to the business that has done the claim. In the interests of tax transparency and fairness, going forward, no tax repayment will be able to be assigned to a third party. Any repayment will remain the property of the taxpayer. Similarly hidden within the accompanying documents was an announcement in relation to capital gains tax. Currently, where spouses or civil partners are separating or divorcing, they're able to transfer assets between each other on a no gain, no loss basis, only in the year in which they separate. This means that there is no taxable gain on the individual transferring the asset, and indeed no allowable loss. Legislation will be introduced which will extend this window for up to 3 years after the year that the spouses or civil partners cease to live together. And in addition, other measures such as an extension of principal private residence relief to the departed spouse will also be considered in the future. There was also an announcement in relation to charitable tax reliefs. Going forward, from the 15th of March, charitable tax reliefs will be restricted to UK charities and community amateur sports clubs. EU and EEA charities, who HMRC previously accepted as qualifying for relief, will now have a transitional period until April 2024. What this means for individual taxpayers is that going forward, they will only be entitled to claim the higher rate relief on charitable giving to UK charities. And finally, a few words about what wasn't mentioned. There was no change to the rate of capital gains tax, which will be seen as very welcome amongst UK taxpayers. The rates will remain as 10% or 20% on most assets, with residential property either being taxed at 18% or 28%. There was no announcement of any changes to capital gains tax reliefs, such as business asset disposal relief. The lifetime limit of £1 million of gains taxed at only 10% remains in place. And there were no changes to personal savings allowances or the amounts that can be contributed to individual savings accounts. So these will stay at £20,000, which can be contributed to an ISA, and an individual who is a basic rate taxpayer being able to earn up to £1,000 of interest, which will fall within their personal savings allowance. I hope this has been a useful summary of the Spring Budget 2023 announcements, and thank you for listening.